So now the gold gone down because of the tensions in Middle East. You're probably aware about the war in Iran and what's going on. So the price of oil skyrocketed, and you probably also noticed that on the petrol station. Did you notice that the price has gone up a lot, right? So investors started to sell some gold because the price of oil increased. In fact, today you see oil price is at $110 dollars per barrel, right? And you can see, by the way, how oil started from the February, basically from the end of February. That's why the oil from $73, it has gone to 120, right? Imagine just from the beginning of the conflict, that's how oil gone up day by day. So what I'm trying to explain to you here, and I'm going to go back to the example of gold. So gold gone down, and for the last 1, 2, 3, 4, 5, 6, 7 days, right? It's already turning back to go higher. So a lot of gold was sold in order for investors to buy some oil, which gone up in value. This is the reason why the gold basically gone down for now. But the reason why gold was increasing up until the end of January is because of central banks in the whole world. They were buying heavily gold because of the Donald Trump, because of his tariffs. So China, let's say, and other central banks of India and stuff, they're buying gold heavily just to avoid dollars. They're selling dollars. So that's the reason why the dollar was declining for the last decade. You with me?
Yeah.
But just so you understand the potential, I'm going to go here and I'm going to show you, let's say, gold price target, where they expect gold to go in 2026. And I will show you what is your potential. So if we just go through the, let's say here, major financial institutions, all right, heavily revised their 2026 gold price target upward, with many prediction prices to hit 6,000 to 6,300. You see that? By the end of 2026. I'm just giving you that, like, for example, JP Morgan, right? You can see the financial institutions. JP Morgan, the biggest financial institution in the US, they're expecting it to go to 6,300. Wells Fargo, another one, 6,100. Bank of America, 6,000. But even Goldman Sachs expected to go to 5,400, what it just was. Let's say, I'm going to be very realistic with you, right? Gold was at 5,000, let's say 500, 5,600. So let's say that the gold goes back to that level. And if you was going to go and buy that now, let me explain to you how that would benefit you, what kind of money you could have made with that. You with me?
Okay.
So if I was going to buy now, let's say you want to trade some gold and you want to buy some gold. The first thing that you need to understand is what direction you want to trade. And as I just showed you now, if you're willing, let's say, to be patient and just give the gold some time, then you have a good opportunity for gold to go back to 5,600 and then to go even higher, according to multiple sources that you check just with me now, with the huge financial institutions. That's what they expect the gold to go. You understand? So if you was going to follow them as well, and if you believe that is also going to go there, the first thing you choose your direction. So now we know that the direction that the gold is expected is to go higher. So that's why we will need to choose direction to buy. You understand?